Hello and welcome to another Impact Insights. I'm really thrilled to have with me today an industry legend in Keith Street, who is Chief Commercial Officer from the Mortgage Lender. Welcome, Keith.
Welcome. Thank you, Dale. Pleased
Thanks
to be here.
Thank you for your time. Like I said, you're an industry legend. You've been around in the market a long time. You've seen all angles of the market. You've seen the highs, you've seen the lows. Could anything have prepared you, for the last 13, 14 weeks? What's happened?
Short answer is no. I think we've both been around when we've had recessions before. I think clearly the speed of how this all came about and the consequences thereafter are unprecedented, Dale. So, I remember one day reading about this strange virus that was in China and what was happening, and then the next thing we know, the whole world's in lockdown in some form or other. So I don't think anybody could have prepared in the time. So never seen anything like this in the speed from sort of instigation to it. We've been in the middle of it. Absolutely.
Sure. And give us a bit of an insight from the TML side. So 1 minute you're lending, you're in resi, you're in buy to let, etc., etc. The next minute, funds.
Yeah, well, unfortunately, fortunately, should I say, from the buy to let basis, we've continued lending, and we have that relationship with Shawbrook, obviously being a bank, and we've continued throughout the crisis, and will continue going forward. Unfortunately, the residential line was through a fund, and they weren't able to support us continually through this period, which was very unfortunate. And obviously, we had to engage with the customers and the clients that were affected and deal with it in as professionally way that we could do, whilst minimising any customer detriment.
Sure.
Which was our main focus.
Yeah. And you've come through it, like I said, like you said, with the buy-to-let side, which is brilliant. Have you adjusted the way that you've dealt with cases that are coming in, the brokers that are sending the cases in, packages like ourselves? Have you sort of taken the business, and re-looked at the way you deal with everything?
Yeah, well, obviously some was forced upon us because we have a head office in Glasgow, which people couldn't work there and still can't. Fortunately, we'd already developed through our BCP planning the ability to work from home, and technology and equipment was there. So we were able to instigate that really quickly.
Yeah.
And as a specialist lender that looks at individual cases, and most of our business now in our industry is transacted online, actually where the physical underwriting takes place, if you've got that technology, doesn't matter so much. So we think we've adjusted pretty well. And also we were able, actually quite early in the process with our buy-to-let funding, to use online valuations and desktop valuations as well.
Yeah.
So, and so yes, it's different. Some of our on-site underwriters are now virtual on-site underwriters. Mm-hmm. And that seems to be going down well with some of our customers as well. So the general functionality hasn't changed. An individual underwriter looks at an individual case,
sure,
and works on that throughout the journey of its application through to offer and on to completion. But the use of technology is sticking it all together at the moment.
Yeah, absolutely. And we deal with your guys a lot on a day-to-day basis. The resilience and actual appetite to help out, especially when a case might refer or decline or whatever else. They're like Rottweilers trying to help out. Can we do this? Is there a way to do it? And so on. So pat on the back to those guys.
Thank you.
And as we're on as we're on the subject of the buy-to-let bits, is it now a really good time for landlords? Should they be concerned about house prices, or is it all going to be area area specific?
One,
what's your views?
One, it's I don't have a crystal ball, and we don't know how long any impact of unemployment, etc., will have over what period of time. And also with the housing market, it's about confidence as well. It's can people transact? And specifically in the buy-to-let, I'm sure there will be some landlords that were looking at opportunity to acquire if there is a bit of softening in the price space.
Yeah.
Fundamentally, we still don't have enough houses for people to live in and buy. So, and we don't build enough. So therefore, the demand on the rental side, I don't think will change dramatically. So I would suspect that there will be a lot of refinancing going on in the buy-to-let space, and potentially, and what we've seen so far, there doesn't seem to be any significant slowing down of people looking at the potential for purchasing and increasing their portfolios at the moment. But again, is this period we're in at the moment sort of a bounce back where there was demand all stacked up until the point where we went into lockdown, or is this a reflection of the new, as it were? So I don't know yet. So I'd like to reserve judgment, but I think there still will be opportunity in the medium to longer term for that sector. Definitely.
Sure, and we saw January, February, March going like this. It was amazing volume business. It was. Yeah. I think March was our best for a new business for about 5 or 6 years, and of course, all of a sudden we hit the crash here. But people will have taken payment holidays over the last few weeks. How will you look at landlords that have taken payment holidays, and maybe where they haven't actually passed that on to the tenant, or maybe they've used that then to prepare the deposit for the next property? What's your thoughts?
Well, we're looking at each case, as you would expect, as a specialist lender on its merits. So we will consider a landlord where they have taken a payment deferral on part or some of their portfolio. We would look obviously at the ability. Was it done because they were financially distressed, or were they being prudent? And we need to be careful, because what you don't want to do is extend somebody's financial difficulty, and so we would want to see that it was actually they did it, they could have passed it on to their tenant, not necessarily have to, but we would want to see that the reason they done it. So, have they any supplementary income that they could have utilised during this period that showed that they were thinking about it rather than something they had to do and there's stress in their affordability? Sure. And so no two cases, as you know, because you've been around as long as I have, are ever the same. So what we say is, if you've got somebody in that situation, give us a call, and speak to us and tell us the dynamics of it. But we'll tell you, if we think it's actually, we think there's some issues backing up there, we're past. But if we think it was, done from a prudent perspective and it makes sense, we would look at it. So
from a broker's point of view, they really need to be evaluating the client's situation before they come to TML.
Yes, but give us a call. There's no harm, picking up the phone. We've got our inbound call centre operating. Calls are coming in every day. That's what they're there for. Give us a ring. Talk about the dynamics of the case, and we'll give you a very honest, straightforward answer.
Yeah, no, fair play. And also, with regards to that, home ownership is changing. First-time buyers are still struggling to get on the ladder massively. Yeah. We've seen these tranche funding and all that sort of stuff that's happening at the moment, especially regarding first-time buyers. So while they still can't get onto the ladder properly, surely buy-to-let is a potential gold mine moving forward, is it?
Yeah, I think so. Whether it's a gold mine or but definitely we've had lots of financial stimulus in this pandemic that we're going through. And, the Help to Buy was due to come to the end next year. It will be interesting to see how both the industry and the government address this sort of home ownership first-time buyer situation going forward. Whether there's going to be a sort of son of Help to Buy, as it were, because I know it had its critics. I'm aware of a couple of commercial entities that are thinking about this again, whether that's something they would like to go back into. And the good old guarantor mortgage might raise its head again, you know. So I think, you know, we still desire to own our homes, and I think there'll be a combination of things that we'll look to try and support that going forward.
Sure.
I think we'll have to.
And as things, you know, changing almost every other day at the moment, criteria changes, LTV changes. Is it easier to change an LTV than it is to change some of the criteria, or what's, you know, buy-to-let was up to 85% at one point?
It's all credit risk, really, isn't it? Whether it's loan to value, whether it's criteria, it's all loan to value or specific criteria, I beg your pardon.
Yeah.
So it's all credit risk, and we look at it, and the industry looks at it in the whole. And, you know, yes, you will have one eye on what you think house prices will do. You'll have another eye on what you think the unemployment will look like. And what we saw very quickly was people stepping back and moving to quality rather than quantity. So, but we're seeing already that, you know, as lenders are taking stock, and there's some relaxation of some of that. And I think that will happen as we all get more comfortable and think what the horizon looks like. But I don't think people are rushing to it. They're normally, the industry is quick to remove things to go for the safer side of lending than they are to go back.
Yeah,
so
no,
I think
absolutely.
we want to be a little bit more.
We've certainly been at this bit before.
What's happening in the real world? Yes.
Yeah, absolutely. And you know, we understand that, and at least, you know, there is appetite to lend right now.
Well, there is, you know, but you also, you have to protect people sometimes from themselves.
Sure.
And, you know, and quite rightly so. And it's time to be prudent, and then see how things start to develop as we come out of this lockdown through the second half of this year, I think.
Sure. And you mentioned residential earlier on. There's quite a few gaps in the market, especially with regards to the residential side at the moment. We're seeing, you know, we know the employment issue when people come out of furlough. We're seeing an increase in adverse and so on and so on. Is this an issue we should be worried about, or is it going to be a huge opportunity?
Well, we need to be careful. People that become suffer a credit event as a consequence of this pandemic will need to be considered as they get back into stable employment, etc. There's always been a market for that, and I'm not talking about predatory lending. I'm talking about people that have suffered some form of credit incident, gone through that, and are now trying to rebuild. And I think that's where the role of the specialist lender that can look at the individual circumstances that created the event, what's happened during the event and subsequent, we will want to look at to see whether there's an opportunity for us to help them as they go forward.
Sure.
So I think there will be, but, you know, not everybody will qualify, and
absolutely.
you know, but it will be when the industry is comfortable that the individual has now returned to sort of their normal status rather than being in the middle of a crisis. You wouldn't.
Yeah, absolutely. And that's a good outlook. Which also, technology should be taking over a lot of this and the calculations and doing the sourcing and the placing and so on. And if we were led to believe all the noise that we've heard over the last 2 years, we should be so much further forward.
Rather than 2 years.
That's one of my points. Is, you know, are we really any further forward than, you know, 12 years ago, 2007, 2008? We had electronic ID, we had AVMs, we had the 1 minute mortgage. You know, we've all been through this before. From a lender's point of view, are we actually any further forward? Are we making your lives a lot easier? Are you making the brokers' lives a lot easier is it something that is really high on your agenda to spend money on right now?
Well, I think there have been improvements, transfer of data and information, as providing a lot of help to the broker and potentially for customers that can source as well out there. That's got to be good news. That's got to be good news. And I, from a lender's perspective, yes, it's better for us if everything's not automated, but utilization of technology is key. And we, like any lender, will be wanting to make investments when we're comfortable that the solutions that are out there are the solutions that are going to be out there. And, there's a number of platforms out there that are purporting to do this and do that and have 70% of the market, etc. And we're listening, and we have to, but capital's always is a finite amount of capital in any organisation, and we want to make sure we make the right investments at the right time with the right people. So I do think, Dale, genuinely, this time it's going to happen. I do.
Okay.
But I don't think it's coming tomorrow. And I think we've got to absorb everything else that's been happening. And it will be high on the agenda. It will be, and it has to be.
Sure.
We never want the technology to do the underwriting, because that's why we employ professional underwriters. But in terms of a lot of the functionality around that, yes, I think it's coming. But we have sort of heard this before, so
Cool. Watch this space.
Yes.
Keith, you're very passionate. What's your motivation every day? What keeps you going?
I work to live. So, I love my job, and I have loved working and want to continue to work. And I enjoy the social interaction, not that we're getting much of that at the moment. And I like the people in the industry and the people I work with. It's great for the grey cells as well, and, maybe, I'll be honest with you, maybe as a youngster, I would have wanted to have built wooden boats and sailed them around the world. But at 59, it's too late. So I still like doing what I do. So,
and
but it doesn't take over.
What's been your highs and lows in the mortgage market in your time in it? You've seen a lot of it.
There's no real. I enjoy every day. There's days that are not great. But I've enjoyed my time with a number of lenders that, and I'm really enjoying my time with TML at the moment. Lows, I think the lowest is when you have to maybe, right size your business as a consequence, because of the human aspect. That's never, we all do it from a business perspective.
Yeah.
But it's not something nice. I had it done to me. It's not great, I suppose that's the bit of the job that, is not particularly, you do it professionally and you do it, openly, etc. But that's something that I've not enjoyed in the past, to be honest.
Okay. It's been brilliant. What's one bit of advice you'd give to a broker out there right now?
I'll tell you a story quickly.
Go on then.
I remember in the early 90s, we were in a recession, and I went into a broker, and he said to me, "The world's ended. It's just, it's all too bad. The phone doesn't ring. Nothing to talk about. Off you go." And so I did. And then in the afternoon, I went into a different, I think it was an estate agent, financial advisor, and he said, "Oh, the world's ended." He said, "But I haven't stopped ringing out all day. Every second of the day, I'm on the phone ringing customers, leads, potentials." So my advice to everyone is, look, yes, we are in a strange time, and those two financial advisors were inhabiting the same bad world. One was a victim. The other one was saying, right, I'm going to go and find where their business is and might have to change a few things. And I've remembered that, 25 years later. So I say to it's not the end of the world, but it's what you do during this period of time will differentiate you, I think, in terms of how you trade through this and get through this.
100% agree. Brilliant bit of advice.
So if that's,
Perfect. Keith, I could talk to you all day, but unfortunately our time has run out. So I really appreciate the time. Thank you very much.
Thank you.
And thank you for watching. There'll be more Impact Insights coming soon. In the meantime, stay well, keep safe.
And you, thank you very much. Good luck. Stay safe.